Hi everyone, this is Adam with the Adam Lee team and Dewitt with Geneva Financial. We're going to talk today a little bit about foreclosures and what it looks like after a foreclosure to purchase a property and some of the steps that you need to do in order to get yourself back in buying power. So let's start off with how long after foreclosure can somebody purchase a property?
This answer may surprise you. After a foreclosure, a buyer can purchase a home, finance a home, in as little as 1 year after the foreclosure.
Interesting.
Now, usually because of the different limitations, we tell people 2 to 3 years.
Okay.
And if you're going to be financing with a USDA loan or an FHA loan, which requires as little as 0% down or at worst case scenario 3.5% down payment, it's going to be 3 years from that bankruptcy.
Okay.
From that foreclosure, I apologize.
Okay.
It's going to be 3 years from that in most cases.
Okay, so after that foreclosure, what are some proactive steps that they need to be doing right after that foreclosure, a couple months out? What does that process look like? What do they need to do to be proactive?
The two biggest things that they need to do is first off, make sure that foreclosure is reported correctly.
Okay.
Sometimes your lender does not report it correctly as it should have been done to close it out and show a zero balance on that foreclosure.
Okay.
By Arizona law, first and second mortgages, if they are purchase money loans, they have to be zeroed out. There's no recourse to you as the homeowner after that foreclosure.
Right.
So the first thing you need to go through and do is 3, 4, maybe 5 months out, have me pull your credit. Go through and just make sure that your credit's where it needs to be to start the rebuilding process.
Okay.
The next big step is the rebuilding process. We need to reestablish credit. Make sure that you have other credit lines that you're paying on that are being paid correctly, being paid on time. So when the time comes 2, 3 years down the road, we have that credit rebuilt and you as a borrower has your stability as a borrower again, your repayment history as a borrower to show that you are okay to go through and purchase a home again.
Okay. And on those loans, so are the banks going to be leery lending to someone who's had a foreclosure previously? Are they going to get a worse interest rate? It's going to be the same interest rate? What does that look like?
Actually, no. The interest rate for a post-foreclosure borrower is going to be the same as a borrower that did not have a foreclosure.
Okay.
You know, on that there are some limitations. The biggest one, for example, is after a foreclosure, we need to make sure that you do not have any late payments after that foreclosure. That's why it's very important to reestablish credit and pay that payment on time.
Okay.
Now, the interest rates are going to be very similar, actually identical, to those buyers who did not have a foreclosure in their recent history.
So it really comes back to how proactive are you in rebuilding that credit and doing the things that you need to do after a foreclosure or bankruptcy short. So regardless of what it is, those life challenges that we have, you need to be proactive on getting your credit back into a buying position.
Correct. A foreclosure can be an emotionally draining experience.
Yes.
And most buyers or most borrowers after that foreclosure, they kind of lose all hope.
Right.
And they need to realize that that's not an end-all for your financial situation. That is a way to go through and kind of start over.
Right.
Where after that foreclosure, if you go through and be proactive and stay on top of it, buying a home down the road is not going to be a hard problem at all. It's
Okay.
not any more difficult or any longer of a process. It can be streamlined very much, any longer of a process if you did not have a foreclosure in your history.
Okay. All right. Well, thank you, Dewy. Again, Adam with the Adam Lee team, Dewitt with Geneva Financial. And this video was how to purchase a home and what you need to do after a foreclosure.